Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in there, take a look, and see what people are sharing. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com. That's where I dive deeper into the individual companies looking for potential investments. And I'll just say this. I've got a hurdle rate. I use the hurdle rates as kind of precious metals. And then I look for investments that can beat those. That I'll just say that the risk is worth taking. Some of these companies are very volatile. You have to hold through it. You got to have the emotional fortitude to kind of hold through these things. And when you do, I'm looking for 10, 20, 30, 40, 50 times my money over a 5 to 10 year period. If that sounds interesting to you, definitely join our community. The community does help other individuals hold on to these rockets, is what I'll call it. And it does look pretty commodities here in the short term. Looks pretty good for a potential breakout and a big run. May Day coupon code is still active if you're interested. 50% off the first month, but only the first month. And then you get a larger discount on the yearly membership for anyone who wants to join. Existing monthly memberships can also join the yearly membership if they like to. So Dr. Perrick, he says, never ask a man his salary, a woman her age, a Google product manager what they do all day. I just find that funny. Had to share that. Yeah, that's what I'll say. Mining news. So Quora Mining acquires Silvercrest, creating a leading silver company with 21 million ounces annual production. Deal values Silvercrest at 1.7 billion. Quora stakeholders own 63%. Las Chispas mine acquisition boosts EBITDA and cash flow. So we are probably going to start to see some of these mergers and acquisitions kick off as companies sell their products or commodities and earn more cash flows. They're going to have money to buy other companies with, and they need to, I'll say, restock their reserves. They're depleting reserves with more. So mergers and acquisitions are the easiest way to do that. So you're probably going to see a lot of mergers and acquisitions coming up here from the big boys buying smaller players. Paulo Macro says, so many bond bros looking so offside here. No more of this higher for longer equals recession equals invert the long end. Bullocks. Just pure reflation and growth. And if bonds can't cop a flight to safety, World War III bid. So he's thinking, more of a reflation and growth trade going on. And that very well could be the case. What people look at for the inverted yield curve is these guys don't understand the dynamics behind it. So what they do is they look at something and they just say, oh, well, when this goes down, that happens. But they don't look any further than that. It's just surface level. Well, what's causing the yield curve to invert? And what is causing the yield curve to uninvert? And there is history, and there are things that we should look at and evaluate. Now, is this time different? I don't know. There's a lot of things that are different here. The stimulus that was created in 2020, I don't think I've ever seen that in history in the U.S. market. So it's not like I can just look up and say, oh, in the 1970s, when we printed 30, 40% of our entire money supply in one shot and handed it out in stimulus, that this is how it reacted. We don't have any of that. We've also got this weird situation with debt being as high as it is. So what they do and what the markets do is they increase interest rates based off of inflation, and interest rates go up. So that is what inverts the yield curve, is that inflation coming into the system. And in my opinion, the inflation was a two-pronged thing. It was stimulus, which is a big chunk of it, and then all of the bank lending that was occurring in 2020, 2021 when they held interest rates down. So all that money came into the system, And it probably increased the interest rate level to an unsustainable level. That's why we saw affordability go down in the housing market, and why we saw home sales fall off a cliff. But now they lowered interest rates to some degree, and we're seeing a lot more refinancing, which is most likely the case is going to happen. And now interest, it's like, whoa, 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 what's going on here? I think they are stuck. The Federal Reserve, is stuck in a weird situation between a demographic that can create credit from the housing market and a interest rate and fiscal spending and interest payments that, if they hold rates at a certain level, they kill monetary credit, but fiscal credit just keeps pumping into the system from interest payments. Then if they lower interest rates, then they get inflation from the demographic and the home buying and the credit creation in the banking monetary system. They're stuck. They are stuck. It's like you get inflation any direction you go. So are rates just going to move sideways? Are they going to literally have to get in the market and start buying down bonds? Buy up bonds to buy down the interest rate? I don't know. They're in a really weird situation here. Most investors just look at it, yield curve's inverted, it's going to uninvert, we get a normal recession. It's like, I don't know. Maybe not. Maybe it's not the same. Nostra says they are desperately trying to stop a silver breakout, and I agree with that. They don't want commodities to go higher. They don't want gold to go higher. They don't want silver to go higher because that is signaling a problem in the system. And I'm not saying silver going to $35, $36, $37. I'm talking about silver going to $100, $200, $300. It's going to cause panic. And right now, we're at a breakout level where we could break into much higher levels. And when you start breaking these resistance levels, it runs a lot faster and a lot harder. So the up days are bigger, and then there's less resistance to that up move. So it's coming. It's coming, and I don't know if there's any way that they can stop that. I really don't know. HR lady making $180,000 a year base comes to me panicking because her data was deleted in Excel. Turns out it was just filtered. I ran into a whole bunch of people like this at my work, and they all made more money than me. And I'm sitting here like, how the heck am I this stupid? Like, I was sitting in some of these, and they made more money at 180K, 200,000. Some of them, like these directors, they made $200,000, $300,000, and I was dumbfounded by how little they knew about anything. So I got a little bit mad, and that's what led me to create this YouTube channel and all this other stuff, and really focus on my investments. And that panned out very well, is what I'll say. When I started to focus my efforts more so on investing and researching and dedicating more of my time, I could make far more money doing investments than I could ever dream of at a 9-to-5 job. Ever dream of. I'm hoping that eventually, maybe, there's a possibility that, hundreds of millions or billions of dollars is on the table. I'm not that old. I still have a lot of years of compounding, and I'm getting pretty dang good. So it's like, wow, what a difference in your life if you focus your efforts on things that can reward you. That is probably one of the most important things that someone can learn at a young age. A lot of people dump a lot of time and effort into jobs that will never return them very much over the long period. They're gaining experience in things that they can't make a lot of money from. And I'm not, I don't consider $180,000 a year a lot of money. I don't consider that a ton of money. So maybe I have a distorted view. Maybe I don't. Maybe, when I had a lot of very wealthy friends, there was one big difference between them and me when I was growing up. I showed them a building. I was like, oh, I wonder if I could work. Mindset was, why would I buy that company? And I'm like, oh man, you have a way different mindset than me. And mindset is a indicator of how much you can make in the future, because I think a lot of people are selling themselves too short. They're not dreaming big enough. I didn't dream big enough. And it was no fault but my own. I came from a family that, it's a solid middle class, maybe solid middle class, upper, middle upper, whatever you want to call it. And that's the mindset that was instilled into me. But that's not an excuse. I still can think on my own. I still can figure things out. Everyone who gives those excuses, they need to just grow up and say, you know what, that's the way I grew up. Those are the cards I was dealt, and now I got to go forward. And whenever you wake up out of the slavery of 9 to 5 jobs, you got to just wake up and go and change your direction if that's what you want to do. JC says they were so busy crying about what kind of landing was coming that they completely missed the takeoff. It's a good lesson. We talked about this in a lot of our question and answer sessions and on the website and a lot of the stuff there in our membership. Is the slowdown behind us? And what I would say is I don't know. I don't think anyone knows until it's behind us. And then it's like, oh, well, that seems so obvious. Gold's been ripping, and gold generally is an indicator of liquidity. And liquidity coming into the system is most likely reflation. So is the slowdown behind us? I would say yes, most probably. But no one's going to know that, especially at the bottom, because everything looks muddy. And when everything looks muddy and it's not crystal clear, that's your best opportunity. You have to buy when things are unclear. And it's when things are the most unclear to the most amount of people. Because that's when it bottoms. It's when everyone is confused and they don't know what to do. Now, when everybody gets this crystal clear picture, then the opportunity is gone. The bottom is already in, and you're off that bottom 20, 30, 40, 100%. So the technicals and the way that people buy these things can give you an edge. They can give you an edge, and you can look at certain things and say, you know what, gold's going up, liquidity's coming into the system. I think it's time to potentially buy, even though everyone is talking about recession, everyone is talking about a slowdown, soft landing, hard landing, blah, 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 all that stuff. Now, are we going to go up? Good question. Sure looks like it. Luke Rum, overpaid and under-automated. Healthcare administration, government, and finance. That's 40 to 50% of U.S. GDP. And I swear to God, guys, the healthcare industry is so garbage. I cannot believe that industry. I hate it. Anyway, fun part comes when it all starts getting automated and the cash flows collateralizing all those folks home and consumer loans, global banks fall sharply. I hate the healthcare system. And, we eat pretty healthy as a family. We don't have that many problems. My kids were premature. They were 27-week babies, 26, 27-week kids. They were twins. They came very early, and some of them struggled a little bit earlier in life. And we had to deal with this. And I'll tell you this, when I went through that and all of those bills, medical bills and stuff, I didn't even know what I had to pay and what I didn't have to pay. I had no idea. And I don't even think the insurance company did a great job of telling me what I needed to cover and what I didn't. I think the whole healthcare area needs to be blown up and needs to be like reset. I couldn't even tell you when I go into the office, like if they have a checkup or if they have whatever, like I couldn't even tell you what the cost is. I'd have to go and ask them, and they're like, well, it depends on insurance. It's like, oh my God, this is a joke. Healthcare is a joke. Sorry, guys, I had to say that. So is government, and I think a lot of finance is a joke. Finance, they don't really create any value. A lot of these like financial institutions, they just are a middleman. And they're like, oh, well, we'll create this money from nothing, give it to you, and charge interest on it. I'm like, well, what did you create? We just created money from nothing. I'm like, that's creating nothing. It's not like a manufacturing facility that manufactures products and you get a product. It's not like you have to do really difficult tasks like creating a design from nothing. It's not like you're having to coordinate all of these materials coming into a manufacturing facility, manufacturing it with equipment, capital, labor, all of these different things. It's not like you have to design and create molds and CNC machine all this stuff. They don't do crap. They just literally make crap up, put it as an entry into a book, and they're like, oh, we make money. It's like, really? I mean, maybe that's the smart thing to do, is to get into finance and take a slice of that pie, you know? Here's high heat. The jobs report was fake. The ensuing stock rally was fake. But what's real is the ongoing suppression of strategic commodities like oil and silver. Oil is going to 90 before it goes to 60, says high heat. Now, you know what? I kind of believe them. I don't care about the projections here. What I care about is that they're, I think, trying to do fake news. They're trying to do all of these things to control the price of these things before this election. I think they're trying to hold silver down to some degree. Go look at the silver price and look at how fast these knockdown prices are. And you know what's weird? If in the real market, if you had that type of selling pressure, you would see a rollover. But we don't see a rollover, which makes me think that someone is in there trying to knock this thing lower. Because if the buying pressure is there, you don't see the selling pressure like that. It doesn't exist. It's not there. But something is there, and it doesn't behave like anything else I see in history. So if it's not like anything else in history, that means that some other entity, aliens, guys, aliens are out there suppressing the price of silver. And it just so happens that silver, gold, platinum, and palladium are the most shorted, naked shorted, paper shorted contracts out there. Do you think that's just by happenstance? I don't. And I think it's all going to blow up in their face eventually. George Gammon says, I see three possibilities. Oh, well, I'm glad that you only see three. U.S. economy is, and I will have been totally wrong about this cycle being the same, which you probably are. Economy is weakening, but still hanging on. Well, that could also be part of number one. We weaken, but then strengthen again, and you're wrong about the cycle. Or 4 weeks before election and Biden administration has control of the data. Well, that is probably part of it. Must be part number two. And the U.S. economy could be doing well. It's just not doing as well as it was before. So the economy is weakening, but it is still doing well. And we are 4 weeks before election and Biden administration. So really, there's like 100 possibilities, not just three. That is called I think that's called, what is that, red herring or whatever it is, where people only give you options than there is possibilities. Yeah, there could be a whole bunch. Maybe the economy is still doing well, but it's weakened from a couple of years ago. So a couple of years ago, it was fire hot in 2021. It weakened in 2022. We did better in 23, but in 24, maybe it's not doing as good as 23, but it's still doing well. And again, there's no metrics around this. Well, and what if they're pumping money into this system? What if inflation is going to overwhelm the nominal pullback? So we go up, but it goes up less against gold, silver, and commodities. That's my argument. It's maybe the economy is doing crappy, but there's so much inflation in the system by looking at prices, because prices just keep going up. Well, that's possibility number 4 and 5 and 6 there. Money wisdom. You don't get rich by spending your time to save money. You get rich by saving your time to make money. You got to read that again. It says, you don't get rich by spending your time to save money. You get rich by saving your time to make money. Or time. You spend less time. So think of it this way. Okay, the way you get rich, make money faster, to make money more efficiently. I think that's probably the best way to say it. And there were people at work, and they would confuse me. They're like, hey, I took this new position, and they went from a position where they worked very little to a position where they worked a lot. But there was an increase in pay. So I was like, yeah, but your dollars per hour is not that good. So you're trading a bunch of time for less money per hour. And they're like, yeah, but I make more money and I have a higher title. I'm like, do that. All these guys that became ultra wealthy, this is how they did it. They increased the efficiency of generating cash per unit of time. So when you look at Bezos and you look at Mark Zuckerberg, they increased their dollars per hour, so to speak, at an infinite rate. So they weren't working more to get less per hour. They were compounding at exponential speeds how fast they could make money on their hourly basis. And that's what he means here. You get rich by saving your time to make money. They're doing it at exponential faster clips. So rather than them making $100 an hour, they're making 50,000 an hour, 100,000 an hour. Then eventually they're making $1 million an hour. And they're doing it through the leveraging of people in their business, their companies. Brady says, we are seeing huge moves in silver miners so far, but ponder that the larger silver bull does not even begin until this chart breaks out. We're still in this baby bull move in the handle portion, a breakout of the handle for silver. When we break 50, that triple top breakout going back to 70s. So we had the 70s. Well, I should say it's a double top, and then it'll be a triple when we break through it here. We're gonna fly, guys. And again, he says the mother of all legit-looking probable cup and handles. It says first, it had the picture-perfect quintuple support backtest to pink handle arc, black line. I'm not going to read all that. That's a lot of stuff there. But the third bull move is coming. It's going to be big. Investment wisdom: only invest what you could afford to lose without that loss having any effect on your daily life in the foreseeable future, says Peter Lynch. Yeah, that's pretty much what I do. Here's another one from Warren Buffett. Invest in yourself. The one easy way to become worth at least 50% more than you are now is to hone your communication skills, both written and verbal. Another thing that I think is highly valuable is being able to sell and to fight for yourself and convince others. So communication is completely important. Being able to stand up in front of a group of people and give speeches, highly valuable. And then being able to sell yourself during an interview. Being able to sell what you can offer. Make sure that you can understand what they want, what they're looking for, and then sell things. It is incredibly important to understand all of that. Those who do that poorly make the least amount of money. Why silver is likely to exceed its 2011 bull run. So this is cumulative stock change. Look at the stock change here. Oh my goodness. Think of it as deficits and inventories. So deficits are eating into inventories, and this was 2011 where we had $50 silver, and look what we've got today. Exactly. This is just the beginning, guys. It's going to hit. This is David Tepper. He says, 14 years ago, David Tepper went on Squawk Box and shared how he made $7 billion in a single year and laid out his worldview and a strategy that worked for the coming decade. So what he's using is the real estate cycle. He's using the real estate cycle. It says, last week, almost 14 years to the day, David returned to Squawk Box to discuss China, stimulus, AI, and more. He starts by discussing whether he still has the intestinal fortitude to make big bets, the Fed and China easing, China relationship between the US and China, risks off or risk limits, tariffs, Japan, Asia investment opportunities, selling a large chunk of his Nvidia stock, and his views on the stock going forward. AI's effect on the energy market, how the political landscape may affect the economy, buying everything in China, a newfound limit for position sizing, stock buybacks, hedging risk, capital flows, crypto, and more. He's buying everything in China because they just went at the end of the deleveraging process. They're going to do a bunch of stimulus, which they're doing now. When they do a bunch of stimulus, they cannot bring back inflation because they oversupplied the real estate market. Since you're going to have a low inflation, low interest rate environment in China, what does well is your technology stocks. And those are going to do incredibly well. So that's what he thinks is going to do well. It's because he knows the real estate cycle. CJ Kim says from 88,000 to 415 million to nothing. This is insane. So this guy did extremely risky options, turned $88,000 into 415 million, mainly in Tesla stock. Then, since he was also working with a financial company, that financial company was, I believe it's RBC, Royal Bank of Canada, I think is what it was. Now he's suing them because he lost it all. Well, of course, you can't go from 8 to 415 million without a concentrated bet using high leverage and then lose it all. This is exactly what Jesse Livermore would do in his trades. He'd put all of his, he'd concentrate, put a bunch of leverage on it, and then ride it all the way up, look really rich, and then lose it all. That's what trading is. That's what concentration does. Concentration can get you wealthy, but you can also lose it all very quickly, especially if you're doing options and all this other stuff, which this guy was. 10 companies, 10 years, 10 baggers. Some are boring, some are not. There are many ways to skin the cat. And this is Amazon, Lilly, Netflix, Fortinet, Fair Isaac Corporation, Tesla, Advanced Micro Devices, MSCI, Cintas, and Builders First Source. This was also all done under a recovery phase of real estate. What is coming next? This is all going to be filled with oil companies and uranium companies, which have already done even more than this, more than a lot of these. But that's what's coming going forward because we're going into an expansion phase and also a lot of fiscal spending. Did the rent cutting cycle start right before inflation expectations are about to make a 2-year continuation breakout? So this is the CRB ready to break to the upside. Yes, so they're going to loosen it right into another big move. It's interconnected. It is interconnected. Here's WTI has finally broken out above its descending channel and horizontal resistance, signaling a potential shift in momentum from bearish to bullish. There's West Texas Intermediate crude going on up, breaking out of its downtrend. Another quote says, it doesn't have to be rock bottom to buy it. It has to be selling for less than you think the value of the business is. And it has to be run by honest and able people. If you can buy into a group of businesses like that, you're going to make money. I agree. Here's another energy headline. I already talked about that one. So we're going to end it there, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon code still active if you'd like that. And that's what I've got for today, guys. So we'll catch you later. This is Finding Value.